So we're going to talk about bad trading weeks, and we're going to talk about the stuff that no one wants to talk about. And that's the case is that, for one, I don't actually have an Australian or British accent. Number two is a lot of people that you'll see online, not everyone obviously, but they'll say like, yeah, we're winning, we're doing good. And then whenever they're losing, they're really quiet. We don't really hear from them a lot. And then the next week, boom, profitable. Yo, we're killing it, guys. We're catching all the pips, mate. Everything's going good. And then you realize that on the outside looking in, it looks like it's all fairy tales and rainbows, and it gives you this weird expectation. You're like, shit, I was profitable last week, but this week I'm not profitable. What the fuck is going on? So here's my personal approach to it. Last month, I made about $82,000 trading FX, crypto, and stocks. And every single trade I've called live, actually my free Telegram right here, which I'm literally going to show you. Everything's documented. I've been running this free Telegram channel for since summer of 2018, so over 5 years at this point. It's the first link in the description. You can literally join this channel. There's 50,000 people in it right now, literally following the trades and analysis that I share every day. But anyway, so even though I made $82,000 last month in FX, stocks, and crypto, here's my week so far for this month. $16,000 down in stocks at the moment. And then I pretty much broke even in FX. I lost $3,000. So we'll just call that $4,000. We'll add 16 plus 4. It's about $20,000 that I'm down. And I made this little post here I wanted to write. So end of the week down in stocks, about $20,000 in stocks and FX. Last month I made 82. You win some, you lose some, but you got to make more on winners than what is lost in the losers. It's the anthem of people who are truly profitable. And the down weeks are nothing to be concerned about in the context of a profitable trading approach that works long term. Look, here's the simple facts. You're going to go to a chart. You're going to have an idea of what you think is going to happen. Maybe price is going to go up. Maybe it's going to go down. And then those outcomes end up playing out. From my experience, and in 7.5 years of trading, it's just 50-50. It's going to start going up or it's going to start going down. It is completely arbitrary. Your stupid reasons for wanting to enter the trade just do not matter. You're using technical analysis, fundamental analysis, currency correlation, moving averages, Fibonacci retracement pullbacks with the institutional order block, liquidity flow, smart money concept, accumulation, distribution, fair value gap, bullish Wagyu beef candlestick pattern. Still going to have a 50% win rate because it goes up or down. That's just objectively what happens. You go to any chart, you take 100 trades where you just enter and you have a one-to-one profit target versus stop loss. Even if you don't have a trading system, even if you just randomly enter buys and sells with just a fixed one-to-one stop loss and take profit, roughly 50% of them will move to the target, 50% will move to the stop loss. There is no way around that, so you'll have to square with that someday. Here's how I square with that. I don't focus on speculating. I focus on how can I get into trades that have a good risk structure. And I'm going to show you that here in this video. This is how I just make a little bit more when I win versus what I lose when I'm wrong. Because to a lot of people, it might not make any sense whatsoever when I say you can have a 50% win rate but still be profitable. My personal win rate might be a little bit higher if we take 100 trades out of a data set and looked at the outcomes. It might be more like 55 to 60%, but even that doesn't even matter. That's all based on experience too. It's subjective to begin with. It's all arbitrary. It's just I've been trading for 7.5 years. Maybe I'm right a little bit more than I'm wrong. But the whole point is you don't even have to be more right or wrong than random chance. All you have to do is make a little bit more money when you're right versus the amount of money that you lose when you're wrong. I've always done this through my whole trading career. My system and my approach for entries have always remained roughly the same. It's just all based around support, resistance, and price action since since essentially 2019. So it's all been roughly the same. The only thing that's changed is the risk structure. I've continued to find better and better and better ways of structuring risk. And it also takes a lot of the stress out of trading because you don't even have to worry about being right as much as you just have to worry about figuring out what's worth a shot to trade based on the structure of the risk. So I'm going to show you how I do this. So you get into a trade and you think price is going to go up or down. This is a trade I took, for example, last week that I was wrong about. This immediately just reversed, went the other way. Then I got into AUD USD trade and I was right about that. That one went right into profit. Same thing on GBP AUD. This one, it was further back here. It was further down here. I thought it was going to go up. That's where the outcome started to occur. And then it started going up and it's halfway to the target. Here's how I make more on the winners versus what I lose on the losers. When you have an idea about what you think will happen, let's take a super simple example, right? Price just comes to a support zone, it breaks it, and then it retests it. So you think that price is going to go down for whatever reason, right? We don't need to go to the moon here with crazy trading examples and explanations and all this logic behind it. None of that shit matters. All that matters is how you control risks. That's just the only thing you should focus on. Keep things simple and control risk. So what you're going to do is you're going to think that price is going to go from this zone down here to make a lower low. Because you just think that, okay, it's making lower lows, lower highs. It was a break and retest of this support zone. normally when price comes and tests the support resistance level and it breaks and retests, it might bounce and it might go down. The only usefulness behind market structure and price action and support or resistance and anything you're ever going to do in trading, the only usefulness in those things is that it gives you a good way of controlling risk. It gives you a way of saying, if I enter here and then price moves against me, I can get out of the trade and lose a little bit. If it moves from here and then it goes down into profit, I have an area where I plan to get out of the trade. And use basic concepts. I'm talking like literal shit like, okay, if it's making lower lows and lower highs, it's probably moving down. Chances are if it pulls back and then starts to kind of twist back around, it might start going into profit again and go down again. Same thing in an uptrend. Higher highs and higher lows. If price pulls back and you buy the dip, the idea is that, okay, if it bounces up, then you'll make a profit. And if it goes a little bit against you, you just close it. Okay, so let's say how would we actually trade this? Here's what I like to do. I like to get out of the losers when they start to screw up. And I like to add to the winners if it starts looking like the final outcome is going to play out. When price starts moving down, it's a little bit more likely that this outcome is going to play out where it goes a little bit more down. And then if it goes that further down, then it's more likely that the outcome is going to play out to the downside. Then if it breaks the previous low, then the final outcome becomes extremely likely to occur, and then you have a winning trade. So you're not going to know at the moment you enter, obviously, because anything could happen. But based on the price action that begins to unfold after you enter the trade and your discernment of that price action, you can do shit to make you profitable. A simple way that I've always explained this about when it comes to adding to winners and losing to losers. If you are watching a horse race, and we're going to do a rectangular racetrack here. I know this is super low production quality. Rectangular racetracks, it's not an oval. Please forgive me. But let's say that you think a horse is going to win a race. So we're going to start here. The horse is going to be going down here, and you have this one horse, and it's coming around the corner, and it looks like this horse is going to win. Meanwhile, you have another horse that started at the same place as this one, and this horse is coming around, but this horse is like back here. So this horse that's losing the race and very likely to lose the race, and this other horse over here that's about to get to the finish line right there, this horse is obviously more likely to win because it's closer to that final place where if you cross that line, then you win the race. This horse over here, though, is losing the race. So we're going to look at this horse as like a losing trade. We're going to look at this horse here as a winning trade. If this trade looks like it's going to win, why wouldn't you bet more on that trade winning? Meanwhile, if this trade looks like it's going to lose, maybe it'll still get there eventually, but it's certainly not going to achieve that outcome before this horse gets to that zone, most likely. Why would you bet more on the losing horse? This works the exact same way in trading. If you get into a trade and it starts moving into drawdown to where your initial desired pre-planned idea of what you thought was going to unfold, where it looks like that is no longer going to occur, why would you add to that? Unless you thought at that point a new outcome would occur, then you have your own contextual structure of managing risk. All that's different. What I'm talking about is the pure outcomes of where you enter a trade with an initial one-to-one fixed stop loss and fixed target. And you're just asking yourself, is point A or point B more likely to occur? Is it going to go up or down to the final target or to the stop loss? When you have a horse that's losing the race, it makes sense to just kind of maybe, if you were able to close your bet and say, let's say if the horse were to finish the race and lose, and I wait till then I'll lose $100. Let's imagine a race where you could just say, you know what, I think this horse is going to lose. I'm immediately going to cancel my bet. And then instead you only lose like maybe $50 instead of $100. And then this horse, say you had bet $100 on this. And then if the horse wins, you make $100. But you can say right here, you know what, I actually think this horse is going to win so much to the point that I'm willing to risk an extra $100 on this because I think the outcome is more likely to occur. Imagine if you could bet more on the winning horse. Well, in trading, you can. I'm going to show you exactly how to do this in practicality, but this was just to give you the logic behind it. In trading, if you can bet an extra $100 on this horse, then it gets here and finish the race and wins, then not only have you made your first $100, but now you've made an additional $100. You've made $200 in this winning horse. Meanwhile, in the races where you lose, you've lost $50 here instead of your full $100 loss if the horse would have lost the race. So let's apply this to actual trading. How would you actually do this? This is how I start every trade off. I started off with just a simple one-to-one risk reward. My invalidation, which is just a fancy way of saying that's where I put my stop loss, goes typically far past the zone and generally above the previous lower high if we're in downtrend structure. If price is just moving in an uptrend, I just put it below the previous big little swing low within the uptrend structure, because price just does this shit over and over. You lower low, lower high, lower low, lower high, lower low, lower high. It's just boring. It just does the same shit. So I come with the idea, like, if it starts moving up this way and goes and cracks that high, I want to be out of the trade because it's no longer likely that the direction of the trend is going to occur anymore. Meanwhile, if I set a 1-to-1 profit target after deciding the stop loss, and then it starts moving towards the target, that target's typically going to be a new low, which makes complete sense because after a lower low, price will generally pull back, make a lower high, and then it will go make a lower low. And it'll just do this over and over and over and over and over and over until the trend ends. And then you can just manage things based on the price action and the discernment of the price action, what you think is going to happen. So how would we actually add to a winning trade? It's very simple. When you enter a trade, let's say it starts moving into drawdown, right? And it breaks this zone. So it breaks this zone. I'm going to use the little arrow tool to show this a little bit more precisely. Let's say price breaks the zone, comes back, and then tests the zone the other side as support, and then it starts to bounce. So if it bounces like this, and then it's come back, tests the zone, and bounces, it now becomes a little bit less likely that this outcome is going to occur. Because if this outcome was going to occur, well, bro/sis, it probably would have just bounced right there. Don't overthink it. If you entered a trade thinking it was going to bounce at that particular level, I don't give a shit what it is. A trend line, a moving average, a support resistance zone, the 61.8 Fibonacci retracement, the institutional order block, Wagyu beef candle, whatever the hell it is. If you were going to be right, don't overthink it. It's probably going to bounce there. That's what typically happens when you win a trade, right? It typically just starts going into profit. Not overthinking it. Super, super simple. If it's going to be wrong and it is likely to continue to the undesired outcome, let's say point A is the target, point B is the stop loss or invalidation or point where you close the trade. If it's going to continue to point B, the undesired outcome, then it's going to show evidence that that's going to start to happen because it will begin to move against you. I'm not saying you just close every trade because it immediately starts to move against you. That's not what I'm saying. All I'm saying is whenever you take price action analysis into context and look at what price actually does after you enter a trade, you can use the discernment of that price action in a really basic, simplified way to help you make decisions that impact your profitability. Now, let's say we had risked $100 on this trade. If it hits the stop loss, we lose $100. If it hits the target down here, we make $100. If this breaks and retests here, then it starts to bounce and go up. Well, now this is likely to turn into a bounce of support and then go up to that previous high. And then at that point, it could even break past that high and go up. It could come up here. It could come and pull down here and make a higher low and then go up and do all this bullshit. So it's no longer as likely that it's going to work out. So oftentimes what I'll do is I'll just close the damn trade right there. Now, how far is this away from the original invalidation? This is 78 pips, so 1 to 3, almost a 1 to 4. So this is about 25% of the way to the stop loss. So if we had risked $100 here and then we end up closing the trade here, we would lose like $25-$30, counting fees and commissions and things like that. Okay, so we've managed to lose a little bit on this losing trade. So sweet. Now let's look at what the outcome would be if it were to profit. And again, what I'm going to do is I'm just going to use the arrows to be a little bit more precise with showing you the little path tool. So let's say price starts to go down a little bit, right? Moves into profit. Then it pulls back a little bit, comes and tests the zone, and then it starts to move into profit again. And then another cool thing here is it breaks the previous low, right? So now you've got a previous low broken, and you've also had price made this little double top right here because it tried twice to get past the zone and failed, and then it broke the previous low. Now, here's what I do. On a trade that's winning, the horse is winning. Why not bet more on the winning horse? You got a winning horse, bro. The horse is winning. So what I'll do is I'll do command copy. You can do duplicate. You can double click and click clone. And then you've got essentially the same trading view size tool. So 285 pips, 285 pips, 1-to-1 risk reward. So let's say you add a trade right there. So let's say your standard lot up here, let's say your trade size was like one standard lot, whatever it is. You can calculate all the risks, right? You've risked $100, whatever the lot size happened to be. It could be 0.69. It can be 4.2 lots. It can be, something like that. It could be one standard lot. Let's just say one standard lot for simplicity. If it starts to bounce, you just add another trade at one standard lot. I'm not saying you do anything. I'm just saying this is what I do. Not financial advice. Don't take any of this seriously. I'm just some idiot yelling in a YouTube video. I'm just sharing what works for me. That's all. You add the same lot size. And then what I do is I drag the first position stop loss to break even. So now what are the outcomes? Well, let's look at it. First outcome, the most desirable outcome, is that it moves down here and price makes a lower low. Now what happens when price makes a lower low? We're going to make some sort of profit. Sometimes, I'll close the first position and profit there, let the second position continue further, then I'll close there, provided I still think it's going to make a lower low before pulling back and coming back up. Sometimes I'll close that second trade at the first trade's target, which in this case would be a 0.7. So instead of making $100 on this trade, I would make 0.7 of one, which would be $70. So I make $100 on the first trade, $70 on the second trade. So that's another outcome. But the outcome is still likely going to be profitable. That's great. The max risk on this trade is $100 throughout the whole time, because what happens, my friend, if it starts going the other way? If it starts going the other way and you start to feel sad inside, it's going to throw your first entry out at break even. Boom. Now you've had a break even, and then you sit in one trade that's in, this is maybe like a $20 to $30 loss at this time. And your new stop loss was up here because it had to be a little bit tighter because you were using the same 1-to-1 fixed ratio with everything. And then on top of that, if it cracks out of these previous lows and started going down, it's probably not going to break this high to begin with if you're wrong. So even if it continues up against you and you close out right here, if it cracks above the zone, okay, so you close out there, you've lost like what? About half of what you risked. So $50 if you risked $100. That means the total outcome, if everything screws up after you add, the total outcome is still only half of your original risk, because you took a break even on the first trade and then you lost half on the second trade. Isn't that crazy? By just getting out of trades that are screwing up a little bit early and holding trades that are winning a little bit further. And like, if you do it like me, like I just pre-structure everything based on a 1-to-1 risk reward ratio just to get the trade started. If you look at how much I actually make on winners versus what I lose on my losers, I almost always, like 95% of the time, make more when I win versus what I lose when I'm wrong. In fact, I haven't had a stop loss hit in quite some time. On the last account that I made for last month, I took a 50K account to 100K in about 1 month. It's technically 1 month and 2 days, but we'll just pay no attention to the 2 days. It took 1 month to go 50K to 100K. I did this risking roughly about anywhere from 10 to at 1.13% per trade. And I was able to grow that over the course of a bunch of trades, 1 month. And when you grow through that terminal P&L history, it was a couple videos on my channel here ago. We're in August of 2023. So it was like either the beginning of this month, August, or July of 2023. I made this video. I took 50K to 100K, and I've done this like 7 times in a row, like without ever blowing one single account of personal capital. I've done it 7 single times in a row. It's been absolutely insane. And the reason I'm doing that is because when you look at the trades, when I'm right and I win, it's a banger trade. I make 5, 10, 15. One trade I made $17,000 in one trade. One trade I made almost as much in that one trade as what I've lost this whole week trading with multiple, doing stocks here and I didn't trade crypto. I don't trade crypto anymore. But FX over here, and everything piles together. There's a bunch of different trades, and I just lost 17. In one trade on Euro AUD like a month ago, I made like 17 grand. On one trade on Tesla 2 weeks ago, I made 17 grand. When I'm right, they are bangers. When I actually have a nice winner, I just make significantly more on the winners versus what I lose on my losers. And that's why you don't have to do all this like magic crystal ball bullshit to try to figure out which way you speculate price is going to go. You're sitting back in your armchair, you're like, you know what, this is good. I think that, price is going to go up because we've got the economic index and the CPI and the commitment of traders report. We've got the fucking interest rate decision and Jerome Powell screaming at the Federal Reserve, and you're doing all this bullshit. Guess what's going to happen? You, my friend, are going to get to the chart and find at the end of the day that price is still just going to move up or down. That's it. And from my experience, if I were to just throw a dart over there and like fuck up your little like chicken soup that you're eating, thinking that you're so cool, if I were to just fuck everything up, I would also add that you're only going to be right roughly 50% of the time, and you'll be wrong 50% of the time. The only way you can make money is by making a little bit more when you're right versus what you lose when you're wrong. I know I've said that like 69 times here in this video. I'm just trying to get the point across because that's the whole point of this video. This is how you get past losing streaks. This is what no one talks about, is that, all right, you're going to lose, yeah, but you're also going to win, and you should make more ideally when you win versus what you lose whenever you're wrong. It's objectively the case that even with a 50% win rate, if you make more when you're right versus what you lose when you're wrong, you statistically are always profitable long-term over a standardized data set given enough trades long-term. That's objectively the case. 50% win rate, but you make more on the winners than you lose on the losers. It is impossible to not be profitable if those metrics are true. So this is how you make those metrics true. Add to your winners, close the losses out early. The way I do this is super simple. I don't consider myself to be a very smart trader. I don't consider myself to be this fucking god. Everyone's just like, yeah, mate, we predicted which way the pound was going to go because the FOMC and NFP came out. We did all this bullshit. I don't fucking know what's going to happen. I don't care what's going to happen. I don't care about looking at all this bullshit. I use basic market structure, support resistance, some price action analysis, and I just control risk. So sure, my past 7.5 years of experience helped me a little bit, but I'm not much better than random chance whenever it actually comes to win rate. If random chance is 50%, if you don't have at least a 50% win rate, you really suck really bad at trading. But you can fix that by just using 1-to-1 risk reward ratios, letting everything play out, and then tracking the data, and then just start to kind of figure out what works and what doesn't for you. But yeah, you're gonna have at least a 50% win rate long term over, like, if you take 100 trades, each 1-to-1, just let them play out. The idea is to start to recognize which ones are more likely to play out based on what occurs after you enter and add to those. Meanwhile, if it starts to screw up and go the other way, you just clip the trade, just exit. You're going to lose 1/4, 1/3, 1/2 of what you risked most times. And then even if you do take a stop out, if you're right and when you win, you're making like 1 to 2 units of reward. But when you're wrong, the worst case scenario is that you're going to lose 1 unit of reward. The worst case scenario that can happen is that you break even. Best case scenario is that you're profitable. And it's hard to not be profitable if those metrics are true. If it is true that you have a 50% win rate and you make more when you win versus what you lose when you're wrong. We're going to go through one more example here, and I'm going to show you. So price starts moving into profit, and then you drag the stop loss in the first position to break even, and then price does in fact continue down here to the final target, and you were profitable. You made that. Now, let's take a look at another type of trade. Let's take a look at a support resistance trade. Actually, let's take a look at a damn trade that I'm looking to take right now. So I'd call this when it was back here earlier in the day. I took AUD sell and I didn't want to overexpose. So well, actually, literally, I'm in this trade like right now. So let's just go look at that. This is the Mission FX Close Friends group. This is a $250 per month paid subscription product that I offer, and this is a trade that I've added on. So this trade started off right here. You can see the take profits way down here. This trade started off with the stop loss all the way up here. So that was the original target, that was the original entry, and this was the stop loss up here. So you can see this is about a 1-to-1. On each of these trades, I was risking 2,000 GBP, so about 2,500 USD. I don't know what the calculation is, but whatever. We'll just say 2,000, right? So I'm risking 2,000 on this trade to try to make 2,000. If I was wrong and price started to cross these previous highs and close above it, like if it wicked it and came back, I think I'd be fine. But if it started to go above and like close above these highs, I'd probably have closed that trade there. That would be about maybe, let's just say $1,000 of loss. So I'd have lost $1,000 if I was wrong. Meanwhile, instead, it started to move into profit. So what did your boy do? Well, here's what I did. For the first position, I dragged the stop loss down to right there. And this is half of what the original stop loss was up here. And for the second position where I added, I put the same stop loss right there. So my risk is maintained at just 1 unit of risk. Worst case scenario, if it goes up here, if it pushes all the way back up here and starts closing real strong, I'd probably get out right there. Maybe lose like $1,000 maybe, and even if the worst case scenario goes and hits the stop losses, it's like $1,000, no big deal. However, if it continues into profit and let's say next week on the market open, it pulls back a little bit, then starts going and cracks the low again, I can add again like a degenerate. And then I can put these positions to break even. And then I can put the stop loss for this last position, like right up here, which might be anywhere from like 500 to 1,000, probably like $1,000 of risk. And I've got 2 positions sitting with break even stop. So it wouldn't even be a big deal at all, like not the slightest bit. The worst case scenario, the risk is still protected with lower than 1 unit of whatever I decided was the original risk before even entering the trade, which in this case was $2,000. So, but if it continues down and I've got even just these 2 positions, I'm going to make $4,000, maybe technically like 3,600 because I've set the TP the same for both of these. So whatever this distance is, maybe this is like 300, $400. So I might make like 3,600 instead of $4,000. I'd have to have a TP lower for the second position to make that equal to that. But whatever, we'll just pretend like that's not the case. Still going to be a really nice winning trade. And imagine, brothers and sisters, if I have 3 entries, right, while maintaining the same risk for the whole time, the same $2,000 risk max, I stand the potential to make almost $6,000 if it continues dumping downwards to the final target. And how did I do this? How did I what was my whole crazy analysis for this pair? Because I'm going to show you it all. I'm going to show you everything in here. This was the whole analysis. Right? You're probably going to laugh at how stupid simple this is. I'm not that smart. I'm not that good at trading. All I do is control risk, and that's how I'm profitable. That's literally the whole reason I'm profitable. I just know how to control risk. So price was moving down and up and down and up and down and up and down and up and down and up, and I just think it's going to move down again. It appears as though price is moving down. We've already tried to break above this resistance zone like once here, twice here, failed to get above it. I just think the downwards momentum will continue. Therefore, as we had all these bear candles down, then price started going sideways here at the support, and it was not bouncing up. All these things came into play, and I was just like, okay, I think it's going to move down from here. Right? Complete genius, right? Oh, it's moving down. It's making lower lows and lower highs. I think I'll sell. It just looks to me like it's going to make a lower low. If I'm wrong, no big deal. It'll spike up here. I'll get stopped out. If it comes for a third time trying to test this zone anyway, I think it'll probably be likely to break at that point. Plus, that'll mean this has been a range. So it's the perfect place to get out of. Some people will put their stops a little bit further past these highs. I don't think that's necessary. I think that if it's going to go, it's not really going to break those highs. And if it does break these little highs, which I showed you guys in the previous example, I'll close there. It'll be like anywhere from $800 to $1,000 of loss. No big deal. But so far, that doesn't happen. So far, it's actually went into profit since I called this, and then I added a position. That first position came back to hit break even on the first entry because I had a break even stop loss. Then as it started going back into profit, I just added back in. That was the second entry. So it's still the same outcomes, the same two entries essentially. And if these continue down, I will make at least $4,000. I'd like to make more like $6,000. And if it screws up, then it's no big deal because it will still be a small loss relative. That is why this account here, I'm trying to grow this account from $5,000 to $100,000. I don't know if it's going to happen. I'm very likely to blow this account and maybe like blow maybe 2 or 3 accounts on the way to trying to get that to happen. But when I finally get a win streak and everything starts to work, provided that I continue to make more than what I lose, which is just very statistically likely to happen, past profits do not guarantee future results. However, past profits are a good indication that future profits might be more likely to occur than not. I think that's a fair statement. I think that's perfectly fair. And so with that being said, even if I lose a couple accounts along the way, ultimately everything can still play out. So I'm waiting on this to see if this trade setup plays out. But that's how I do it. I look at the chart. I ask myself what I think is going to happen. If I think it's going to go up or down, I'll enter a buy or a sell. I'll just start everything off with a 1-to-1 risk-reward ratio just to structure the risk for the trade. As it moves into profit, I'll add in profit, protect the previous positions, and I'll just let it run. When I win, which I do half the time, at least, it's not a little bit more sometimes, then I make a nice little profit. I make a lot of money. When I lose, I typically lose a little bit of money. I don't really add to the losses. So it just goes against me. I'm just like, oh, this is boring, not working. I just get out. This whole week of trading, my risk started with a $4,000 risk per trade. It's because I had actually grown the account a little bit more. The account was sitting around 10K, but then I lost like that. So it was like, I lost like 3,600 this week, plus the open trade. So I guess a little bit less. The whole risk that I'm down for this whole week that you guys saw right here, this whole everything, 3,600, this is less than 1 unit of risk for me. If you look, I don't even have a single winner this week. I didn't even have a single winning trade. It was all like break evens and small losses. The worst case scenario, this is the worst case. I'm down less than 1 unit of risk. If I had won any single one of these trades, I would have made more than the total amount I lost for the whole week. And I think this gives a lot of perspective because it means that people who are profitable, who have a good system that's pretty predictable and works long term, and they know they're probably going to make more money than they lose long term. When you have losing weeks, you're not even sweating it. You don't even give a shit because all it takes is just a small win streak and you just make fuck tons more money during the win streak than what you lose in your losing streak. I'll leave you with this as we're exiting this video here. Keep things simple and control risk. All you have to, price is just going to go up or down and it's 50-50. So don't even worry about speculating. Just focus on trading opportunities where you have a very clear idea of what the risk structure will be and what your plan is to do after you enter the trade and it begins either moving against you or either moving into profit. If you could just manage that and just control the risk and just focus on it from a risk perspective, trading no longer becomes this thing where you're obsessing over how to predict which way price is going to go next and this and that. You got to be right all the time. No, it just becomes a way of like, how can I control risk and just let the stats play out over a long period of time? And that is why you don't see me sweating whenever if I have a 15-week win streak. And then this last week is like my first down week after all that. Crazy month last month, $82,000, freaking insane. And I called every single trade live. My stock trades, literally, it's all here on my YouTube channel from a couple days ago. Either the beginning of August 2023, depending on when you're watching this, or like the end of July last month, like maybe the last week of July 2023. All of it's there. I showed the Tesla trade. I showed you closing it in my terminal. I had like a $250,000 position, made $17,000 in like 1 day on that thing whenever I closed all the positions. Same thing in FX. I called every single trade from start to finish. In 1 month, I grew that account from 50 grand to a little over 100 grand in 1 month and called every single trade live. Whenever I've got win streaks, they're badass. When I've got losing streaks, they're not that big of a setback in the big picture. So that's what I'll leave you with. Make more whenever you're right versus what you lose when you're wrong. Then when you have losing streaks, you can talk about it because you don't give a shit. Meanwhile, everyone else who has no clue what they're doing which I kind of don't have a clue what I'm doing myself, but we'll just leave that to the side. If you don't know how to control risk, that's why you see nobody talking about things like this. They're like, oh shit, I'm having a winning week, but I have a losing week and I lose everything, and sometimes a little bit more than what I've made on my losing weeks. You're not profitable. It's not going to work long term. Make more than you lose. That's it. Keep things simple and control risk. See you in the next one. Peace.